Thank you, family and friends, for attending the Northern Graphite presentation. There are some forward-looking statements in this and some cautionary language, so if you are interested in the fine print, you can come by booth 327 and get a hard copy and read it at your leisure. Why should you be interested in Northern Graphite? Graphite is the anode material in a lithium-ion battery, and the EV and grid storage industries are growing. Demand from those industries is growing very rapidly. Almost all of the supply comes from China. The high-end part of the market, which is the larger flake sizes, there are shortages. The only North American mine is closing. We are the only Western graphite project that, as we say, checks all the boxes, a realistic production level relative to the market size of the market, reasonable capital cost. We have the best flake size distribution in the industry. We're economic at current prices. It's located right here in Canada. We've completed a full feasibility study and have our major mining permit, and we only have 65 million shares outstanding. So if you're interested in this industry, there's a very good package of reasons why you should have a look at Northern Graphite. This is a chart of the graphite price. Some of you may recall that graphite had quite a nice run back in 2012, 2013. And then the Chinese economy slowed down. There was some new production in China and Africa. EV growth has been slower than expected. So prices have kind of flatlined ever since. And we didn't really have that second run-up that lithium had and that cobalt had. So is it going to come? Should you be interested in graphite because you expect that to happen? Here's a few charts that might help you make up your mind. The lithium-ion battery industry is a $20 billion industry growing at over 20% a year. That has been mainly cameras, laptops, cell phones, all that good stuff. And now electric vehicles and grid storage, much larger batteries, much larger markets. So very good potential that growth you see on that chart will continue. What else out there is growing at 10 or 20% per year? In 2015, that circle on the left, there were 3 new lithium-ion battery manufacturing plants being built. Tesla, LG Chem, and Foxconn, who are Apple's contract manufacturer. There are now over 100 in the pipeline. 100. That will require annual world graphite production to more than double. You can't read the fine print here. You can come and get a hard copy of the presentation, but basically what this slide does is describes the investment and the initiatives that all of the major car makers are making in electric vehicles. They're not that big a deal right now, but they're going to be, and I'd like to focus just on 3 of these. Volkswagen has committed $91 billion, that's $91 billion to develop EVs and buy lithium-ion batteries over the next 5 years. And they're projecting annual sales of 3 million units by 2025. This one automaker alone would require a 30 to 40% increase in annual world graphite production to build that many cars. GM and LG just announced a $2.3 billion lithium-ion battery manufacturing plant in Ohio. That one plant would require the entire graphite production the size of our Bissett Creek mine, which is 10 hours by transport truck from Ohio. It's the closest deposit. No ships, no ports, no political risk, no borders with the free trade agreement. A third very important announcement this year BMW is going to directly source lithium and cobalt from miners. That lithium deal is $500 million. And the reason they're doing that is they're buying the raw materials directly from the mine, they're providing them to their battery manufacturers, and then the battery manufacturers provide the batteries for BMW's cars. They want a secure source of supply and a transparent, ethical supply chain. They know exactly which mine it's coming from, how it's being handled, and where it's going. I think you're going to see a lot more than that, a lot more deals like that, and they have to be looking at graphite. So 4 reasons why graphite has a bright future. China controls 100% of the anode material market. The growth in EVs and grid storage, as I already described. There's a couple other industry sources there about future demand. The third one there, Min Metals. Min Metals is a state-owned Chinese company that's one of the largest metals and minerals trading companies in the world. This is a multi-billion-dollar organization that is forecasting a graphite supply shortage in 2020 and a substantial shortfall in supply by 2025. The Chinese are converting in their batteries, or will be, from synthetic to natural. And there was a large new mine built in Africa which has kept prices down. That mine has closed because of metallurgical problems. Switching to our project, Bissett Creek. It's located between Ottawa and North Bay, about 15 kilometers from the Trans-Canada Highway. We have completed a feasibility study. We have our major mining permit. We're close to North Bay and Sudbury, which are major mining supply centers, and we have access to natural gas. That's about as good as it gets in terms of infrastructure in the mining business. It's a fairly simple open pit mine. We call it Mining 101, Metallurgy 101. Little overburden, low waste to ore ratio. It's a flotation plant, and the flake is easily separated from the rock. That is not true of all graphite deposits. 2 have been built in the last few years, both in Africa with weathered deposits, and both failed because of metallurgy. We don't have the same type of weathered deposit that they have, and we don't have that same metallurgical problem. So not all graphite deposits are created equal. We're going to produce 25,000 tons a year. Capital cost is $85 million US. We're also going to do value-added processing on this graphite to upgrade it for a number of specialty markets. It will be financed through a combination of leasing, debt, and equity. $85 million US for the mine, $15 million for the value-added processing. Just a quick summary of, these are the 4 major North American graphite projects, all have feasibility studies. The big difference is that our flake size distribution, you can see Northern on the left there, is all in the large flake sizes, which are more valuable, and the other companies have a lot more small flake and fines. If you look down at the bottom, average revenue per ton current, you'll see that we have a substantial price advantage over the other companies because of the quality of our product. And the bottom line, that's the capital cost of those mines. So you can see that we have a high margin mine with a low capital cost, which is the opposite of the other projects. 65 million shares outstanding. We're quite proud of the fact that we have a full feasibility study and our major environmental permit, and we don't have 500 million shares outstanding. 1.4 million in cash, low burn rate. Experienced management and board. Everybody here has an experienced management and board, apparently. And yeah, Northern, in terms of a graphite project, ticks all the boxes. We're an advanced stage project, ready to develop in a politically stable country, high quality product, which is important in industrial minerals, and it will provide an alternative to Chinese production, attractive share structure. Sorry for the speed read here at the end, but we're right around the corner in booth 327. So if you want to go through it in a little more detail, or if you have any questions, feel free to stop by. Thank you.